Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking gold, and gold was up on Friday. We had the early overnight highs put in after the Syrian incident. We had the non-farm payroll came in on the headline, looked pretty weak. We saw gold rally up to a 5-month high. Certainly a big move up towards 1271. And it looked like the market was going to continue to push higher. Alas, we did see an afternoon sell-off, normalization across the board in all markets. We saw Treasury yields rise, we saw stocks rise, we saw the dollar normalize, and we did see gold come off its highs. Still up on the day, but certainly didn't show that that fear bid that looked like was creeping into the market. So I think what this does is we got a lot of shorts taken out of the market, a lot of and you probably have a lot of fear buys in there. So right now the market's going to start to build again right near the 1250 to 1255 area. I look for that to kind of hold until we get some clarity from the Fed. And today we also heard from New York Fed President Dudley talking about balance sheet, talking about the Fed, certainly not looking past the jobs number, but staying on course. And I think that also helped keep the dollar bid, helped sort of normalize the markets. Despite the fact that the jobs number today, the headline was bad, you did see some behind the scenes good news. Certainly from the household sector, and that in itself kind of kept the market, I think, from really throwing in the towel on any Fed rate hikes. If you look over in Fed fund futures, they're telling you that there's still 50 to 60% chance that the Fed's going to go. So gold prices, while they did make new highs, certainly were unable to sustain them, at least until we get more clarity. Now, as we move forward, yeah, there's still a lot of uncertainty, and I don't think gold's gonna collapse here under its own weight, despite the fact that we saw that big move up and a big move down very quickly. I think we continue to look at gold the same way we did yesterday, and that is such that there is no certainty on the U.S. economy. There is no certainty on how aggressive the Fed could be with their rate hikes, and certainly now you throw the geopolitical risk into the mix, it only keeps gold bid. So I'm again looking for gold prices to hover near 1250. I think if you see a trade down, you need to get down probably below 1235 in order to really start to sweat it out. But I think right now we're going to see 1250. Make a slow move back to 1270, refill that gap, or the single prints we put in to the highs and back, and I think that would certainly reaffirm the fact that gold is not going anywhere, at least until we get confirmation, which isn't going to be tomorrow. It isn't going to be on Monday. We wait until we get those growth numbers at the end of the month, and then wait until we get FOMC in early May, and those will be the things that we look at to kind of push gold around. So right now, gold holding at 1250 to 1255. This has been Todd Colvin coming to you from the floor of the CME Group.